Breaking news. Asian stock markets have made history today. From Tokyo to Sydney, indexes have surged to record highs, signaling a fresh wave of optimism for the global economy. This rally comes after the United States and China agreed to extend their trade war truce for another 90 days, a move warmly welcomed by investors worldwide. To understand the impact of this news, we need to look back. The trade war between the United States and China has been ongoing for several years, creating uncertainty in global markets. High import tariffs, trade restrictions, and tech sanctions have all slowed down global growth. But the latest announcement from Washington and Beijing, that they will extend the truce for another 3 months, has sparked new hope. Analysts see this as a crucial pause to allow for more constructive negotiations and to calm volatile markets. The effects are clear in Asia's stock exchanges. In Japan, the Nikkei 225 jumped 2.2%, reaching levels never seen before. The Topix index also gained 1.4%, boosted by strong performances in the tech and automotive sectors. In Australia, the S&P/ASX 200 hit an all-time high, supported by rising prices for commodities like iron ore and coal. Meanwhile, Asian currencies such as the Japanese yen, Australian dollar, and South Korean won all strengthened against the US dollar, signaling renewed investor confidence. So, why does this truce have such a big impact? First, trade between the US and China accounts for trillions of dollars annually. When relations improve, the flow of goods and services becomes smoother, benefiting many Asian countries involved in global supply chains. Second, investors tend to avoid risk during trade tensions, pulling money out of emerging markets. When tensions ease, capital flows back in, pushing stock prices higher. Third, the technology sector gets a major boost. Companies producing chips, electric vehicles, and electronics see bigger export opportunities when tariffs are reduced. It's not just Asia feeling the effects. European markets opened higher following Asia's positive momentum. Wall Street is also expected to start the day bullish. Global oil prices ticked higher, while gold prices dipped slightly as investors shifted towards riskier assets. For the global economy, this is welcome news. The IMF even projects that if a permanent trade deal is reached, global growth could increase by 0.3% next year. However, analysts caution that this truce lasts only 90 days. Without a clear agreement by then, uncertainty could return to haunt the markets. A senior economist in Tokyo said, "We're witnessing a market euphoria phase, but that doesn't mean the problem is solved."